As we enter a new year and conclude the previous one, it's a great time to take a look at predictions of the past, ideas that we had that went both right and wrong. I wrote a long newsletter about it this morning, if you guys missed it, talking about some of my predictions from the end of 2021 for 2022. Spoiler, I went about 4 for 10. I did not do that well. 2022 was not what I expected it to be, and it's a good reminder to all of us that none of us have a crystal ball. But that doesn't mean we shouldn't try. Right. And here we are at the end of 2022, coming into 2023, which could be a very rocky year for markets. But today I have an amazing guest, Gareth Soloway, and he's going to share some actionable advice, some intelligence, what he's looking at the charts. And I'm going to do the same. We're going to play back and forth off of one another to see if we can get an idea of what's worth trading coming into 2023 and what the year might look like. You guys definitely do not want to miss this one. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and pound the like button with the backside of your fist. I don't really care how you do it. Actually, I don't even care if you do it at all. I'm going to be honest. Like I said, yeah, you're like, you get kicked off of the algorithm if you don't tell people to smash a like button or something, right? And honestly, if I really wanted to not to do better on YouTube, I'd do a lot more of this. And, like these and I can't do it. I can't do it. Right. The clickbait titles and the crazy faces, but I don't begrudge those who are able to go that route. I don't know. 46-year-old man with a wide open mouth on a YouTube thumbnail just doesn't appeal to my sensibilities. So yeah, guys, listen, as I mentioned there in the introduction, now is a great time to, reevaluate 2022. I try to do that in the newsletter, but more importantly, I think to look forward to 2023, because there's a lot of question marks as to what's going to happen with markets. This is about as divided as I've seen, I think, the communities, traders, investors, all on what's likely to come next. And to be quite frank, when you see that level of division and controversy, it's usually a major top or a bottom, or that one is approaching. I'm not sure if today's guest will agree with that, but we can talk about it. But I certainly can remember how angry bulls were when Bitcoin was 65, 69, when anyone would dare mention that maybe it was going to go down and it wasn't going to 100,000, or it wasn't going to 250,000, or it wasn't going to a million. Before we get started, real quick, as I told you guys last week, we do have a new sponsor here, Prime XBT. This is a trading show on Tuesdays. If you are going to trade, that's a good place to check out. They have basically everything you could possibly ever want to trade. You can get up to a $7,000 bonus for doing it. And even though they're my sponsor, as I'll say with any exchange, it's good for trading. It's not a custodian. It's not a bank, right? So use it for trading and for its intended purpose. And that's it. So I'm going to go ahead now and bring on our amazing guest today. I've got Gareth Soloway. I don't even know if you need an introduction at this point, but welcome, man. It's great to finally have you here.
Yeah, well, thank you so much, Scott. It's awesome to be on.
Yeah. So listen, let's just dive right into it, right? Because we're always on limited time here. Let's start maybe with a general idea of what you're expecting moving forward, where you think markets are at. Kind of give us the broad strokes.
Yeah, no doubt. So for me, it's looking at the Bitcoin chart and basically saying to myself, all right, well, right now we had the FTX fiasco. The issue here is that since that's occurred, we haven't snapped back. We've been kind of staying in the lower ranges. On a technical basis, that's short-term negative, right? And again, it's called what's called a bear flag, or in spirit of bear flag. So at least in the near term, going into January, I do think there's a little bit more downside, but there are some positives. I'd love to show you guys some charting action here. One of the positives, and in general, I'm a huge long-term bull on Bitcoin. It's just, I'm also a trader. I'm also a trader who lived through the .com era. That was the early part of my career. So many similarities in how stocks and penny stocks ran in the late 90s and then collapsed to where crypto was over the last couple of years. But one of the positives for Bitcoin, and why I think, yes, there's downside, but I actually think we're going to make a low in 2023, is that we saw the Terra Luna collapse here and price dropped on Bitcoin 45%. Then you had the FTX collapse and price drops 23 or 25%. And so you could arguably make the case that FTX was a bigger deal for crypto than the Terra Luna collapse, but price lost a smaller percentage. And so I think for me, that's saying to me, okay, we're getting closer to that bottom, even if we're not there.
Yeah, I completely agree with that. It kind of gives the idea that maybe FTX was sort of the end of the contagion from Luna, not the beginning of a different one. And as you said, when you take a look at the balance sheet sort of these companies, they sold the Bitcoin that they had to sell, right? FTX would be a much bigger disaster if you looked at their balance sheet and saw tens of thousands of Bitcoin on it, but that's not what was there because that is the item that you can sell. I don't know. Can you talk generally about what strategies you use in your charting? I mean, I can see you obviously draw some classical patterns. I literally just pulled up my daily chart. And it looks almost exactly the same as yours. That's with funny. That same line here and sort of the same line down at the bottom. So not too dissimilar. I also, of course, have the 50 MA there, which is that blue line. And that, I mean, yeah, I wrote about it yesterday, but you can't get really excited when you're slamming into that line right there, especially with it aggressively pointing down in that manner. But I'll bring your chart back up.
No, you're right. I use a lot of classical trend lines. I try to limit how many different techniques and different things. I do use moving averages. Fibonacci retraces are really, really helpful as well. And you're right. Basically what we saw here, for instance, there was a little bit of a bullish pattern that took us up, right? So, just looking at what we call a micro pattern, there was a micro move up, and then this is what's called a bullish bull flag. And you could see that it was a very short-lived bull flag as it took us right into the Federal Reserve. And then we saw a reversal. And what you don't like to see is a reversal that then negates the low of the previous bullish pattern. And that's what we have now. So, you could argue again that now we're making this almost inverse pattern here, which potentially sets us up to retest that 15,700 level. Couple things that I've kind of been playing with, and I'm a stock market guy by trade. That's how I grew up. I started again in the late 90s. Crypto wasn't around until 2009. But one of the things that I've been playing around with is comparing the FTX collapse and its impact on the industry to the Lehman Brothers collapse in 2008. And I think that's really interesting in terms of the fear. And remember, when you're trading charts, you're trading human emotion, right? When someone buys, they're greedy, they think it's going up. When someone sells, they're fearful, they think the price is going to go down. So really, you can compare different charts, different time periods, historical charts to what's going on because it tends to repeat over and over again. So if you look at that, Bitcoin, or at least the S&P 500 after Lehman Brothers, dropped another 45%, and it took about 6 months. So for me, in terms of where Bitcoin could bottom in 2023, I'm looking at 6 months out from the FTX drop, which is right around May to June. And then also we're looking at, right around that 10,000-ish area, potentially, maybe a little bit below in terms of Bitcoin. I also think that with Bitcoin, the 10,000 will be a max pain. And Scott, I know you know about this stuff in terms of, where do you force the most fear out of people? And it probably would be around that 10,000 break.
Yeah, I would say it would have to be a break of 10, not even a touch, because the minute that you go from 5, I mean, we talk about psychological levels here all the time, 10, 20, 30, 40, they're very round, but 10 is particularly terrifying because you're going from 5 digits to 4. That's right. It almost, you can compare 10 to 90, but you can compare 9 to 1, right? So it feels the same. And so I don't know that we're going to 10, but I do agree that would be a max pain scenario. Although, interestingly, right now in the short term, I've kind of had the idea that max pain would be up. I'm not saying up to new highs or anything, but maybe, up to start pushing into the 20s or something that really gets people excited before it crushes them. The reason being that because I think most of the people, I'm not talking about retail investors, but most of the people who are aggressively trading Bitcoin in this market were on FTX. And I don't think that they've really sort of allow themselves to understand that they're not long anymore. Yeah. But all these people who are long crypto no longer have access to any of it. So I think the most painful thing is that for a price to go up while nobody has any money to buy. Yeah. And I think, by the way, which is terrible to say, but I think that's a max pain scenario for, for a little while here. Yeah, and I think what you're speaking my language in terms of,
if you look at the stock market, and the stock market's now been in a bear market since basically the start of 2022, and you've had these, in bear markets, you tend to get what's called rip your face off rallies, right? Where you have these mega sized reversals that make people think the low is in. And we really haven't seen that. If you look at Bitcoin, like the biggest rally we had was this right here, and you haven't seen that. So I agree with you that in a weird way, you'd almost expect it to catch people off guard and kind of rip up to 20 or 30 before that next leg potentially lower.
Yeah, I mean, imagine Bitcoin going from, 17 or whatever it is here to 30 and then to 10.
Yeah.
Oh, my God. So, I mean, it sounds like you're not overtly bearish on macro or on Bitcoin overall for 2023, though.
No, yeah, I'm in the camp that I think at some point in 2023, and it could be a contagion even from the stock market. I'm actually very bearish on the stock market. I think we're heading into a recession, and so I think prices in stocks will go a lot lower. And I almost think that that's going to be the kicker for why Bitcoin declines up into a point. I think that once we get some regulation in the space, which really regulation is code for transparency for all us retail investors. We need transparency now. And I think once we get that, then you're going to start to attract big money. If there's one thing I realize, and you can see it with the big money that was invested in FTX, big money is now 100% on the sidelines. I'm not seeing any movement in the hedge fund industry to invest in crypto until there's transparency, because they have this fiduciary responsibility to safeguard funds, and there's just no clarity now.
Yeah, I had Dave Weisberger yesterday on, the CEO of CoinRoutes, and obviously, they basically have created a way to get the most efficient and, real-time pricing and to trade for institutions. And he basically said that most of their clients, or a huge portion of them, either completely lost their money on FTX or are waiting for that. And so it's not just anecdotal, right? Yeah, we have evidence that exactly what you said is the case. But that said, right, you trade. It's what you do on a daily basis. So let's go past Bitcoin and see, are there any, I promised people this, by the way, on Twitter, so now I have to put you on the spot. Are there any specific alts that you're watching right now, I guess, in the short term, but then also, listen, if this market's going to bottom in 2023, we all know that it's a generational opportunity long-term to make some money.
Yep. Absolutely. And again, for me, it's just to be clear, and I'm big on transparency. What I've been doing in terms of my personal investments is I basically decided that when we were in that 17-ish thousand range, that I would start accumulating a little bit of a longer term HODL position in Bitcoin. But what I did before I started to do that, I took a certain amount of money. I said, this is what I feel comfortable based on my net worth, et cetera, for putting in Bitcoin. And I divided it into 6 portions, equal portions. And I took that first 1/6, then I put it in around 17 and change. And then the idea is every 3,000 down, I'll just add another 1/6 until I accumulate. This way, I'm not trying to be a fancy trader here and pick the exact bottom, because honestly, I'd probably miss it. But at least I have exposure on the way down if it does start to rip higher. Now, looking at Ethereum, for instance, one of the things you were talking about is, what is the max pain? Could it be to the upside? And the one thing I'm watching here, right, is this trend line right here, this downsloping one. I saw you had it on Bitcoin. It's basically the same sort of thing. And notice how you have this little mini bull flag right here. All right, now we are backing off. Stock market is down today again. But if we could break this level, I would say around 1,235, 1,240, you actually have the potential to retest this high and maybe even get to a longer term trend line. Let me erase this one. This would be a longer term up move.
17-ish or something.
Yeah. Back to about 1450 to 1500.
Okay.
So I think that's kind of interesting there in terms of maybe we get a short-term move up before that next flush to the downside.
Yeah, I don't disagree with that at all. I want to ask you something about your strategy, though, because a lot of people don't have a plan for this when it goes wrong. So you kind of have a buy the dip strategy that's level dependent. It's not I'm just going to buy on the first of the month, right, 6 times, which it would be dollar cost averaging. What happens for you if we don't see the drop to 13, 10, 7 in those opportunities? What happens if we get to 22, 25, 30, 40? Do you continue then to, put in those $3,000 tranches, or is it basically like it's only for if price goes down and you'd be comfortable sort of quote unquote missing it?
Yeah. So a couple things that I'm watching here on it, right? So, and that's a great point, because there's, let's say I only have a tiny position and it goes up. And so you can see here, this longer term trend line on Bitcoin did break through it. So I'm looking at this one here. All right, this kind of one connecting this high. And essentially, if we were to make a strong move up, right? So essentially, this is your big drop on FTX, and that now becomes my zone. All right. So if we were to rally up, let's say we break above that level, and let's just say we do go to 25,000. What I then look to do is I have to admit that this bigger bearish pattern has now failed. And what I would do is I would look to buy what we call a retrace to the scene of the crime, which is basically the retrace. And so once something breaks out,
flip of resistance to support. Right.
Exactly. I'm never one to chase. Like, chasing is the cardinal sin in investing and trading. What you'll do is you always get pullbacks. You just have to know what levels will now be support, and they are former resistance levels. So for instance, I would then start to pick some up right in this range if we can take out. And I think the FTX high is now, that's now the level to beat, as in terms of charting. Like, that is a psychological point where if we could break through that, now you're talking about potential further upside.
Yeah, I don't disagree with that at all. So Ethereum, how are you then looking to play it? I sort of interrupted there. And interestingly, I just happened, I'm kind of just opening charts as you say them to get my own look. And the 50, as you said, it looks like Bitcoin with the descending line, but it also has the 50 MA exactly right there. Yeah, that's where we're getting rejected today. And I've never been a big MA guy, to be quite frank, but yeah.
So we have the move. I mean, let's just say we do break above this area. All right. So you have two options, and one would be obviously a retrace to this FTX high, same kind of thing right there. The other one would be this one back here, which I actually kind of would favor because it's a longer term trend line, where same kind of thing. If you get the big breakout here, let's say all of a sudden we do get some regulation that potentially is positive for crypto in terms of transparency, it causes a price spike, then I would look to buy the pullback back to that level. So you're looking to buy, 1400-ish area, 1450 on that trend line retrace.
Yeah, that would also, as you're kind of saying that, I mean, I don't know what would happen. That would flatten out the MAs and start moving them up. And that would probably be right around, if we say, the 200 sort of starts to trend up, that's right around 1400. It's a lot of confluence in these same areas, regardless of the way you look at it, which is always interesting when you do technical analysis. You have a million strategies, and it seems like they all lend to those points of maximum pain, or where people have, lost or gained money. Okay. So that's interesting. You have someone asking specifically, and I think maybe you were looking at this one. Hey, G-Man, what about Solana TA?
Yeah, absolutely.
You have a Solana chart worth looking at?
Yeah, so Solana's kind of an intriguing one here. Now, part of the positives, I mean, there's positives and negatives. The negative is basically right now we're at this key level here, where if we look at the low from basically the drop with FTX, we heard that FTX held a ton of Solana, and obviously that caused a big price drop. Since then, it's actually held up amazingly well, but this is the game time level, right? You would prefer not to see a close below this 1090-ish level. Currently, it is below there, but we need to see, does it stay below, or by day's end, does it recapture that line? If it recaptures, this would be a very easy trade for someone to take as a trader, where you would say, okay, as long as it doesn't close below 1090, I go long. If it closes below 1090, I stop out for what, a 5, 10, 15 cent loss. But the upside could potentially be quite a bit. I mean, you could be looking at a move back to 14, 15 bucks in the near term. So, we always look at risk versus reward. And again, it's going to be dependent. I wouldn't enter this until I see where today closes, and I'd want to see it close back really above 1090, 1095. But that would be an interesting little short-term trade on Solana if double bottom does hold here.
Yeah, it does look very double bottomy for a short-term trade. Do you have a longer-term trade sort of vision on it? I mean, listen, there's a lot of people who just think Solana's dead. I mean, I was just going to say this, but one of our comments here from Robert Vermouth, 2 biggest NFT projects on Solana just left, which, I mean, to me, that feels like a short-term issue.
Yeah, and I agree. I think the bottom line
noise, not signal.
Yeah, and the technology, right? I mean, you guys know, a lot more about the underlying technology, but what I've heard is Solana's, in terms of comparing it to Ethereum, it's way faster in terms of transactions. And so the idea is, as long as it doesn't get pounded into oblivion by FTX unloading any position or anything else, I think that longer term, it could be very, very attractive to investors and to developers out there. So it would be one of those things where, like, this would be into my speculative category of investing. It's never something that I would put like a huge amount of my portfolio in. But if you look at where it's trading and where the all-time highs were, which were like 100, 270 bucks or so,
259.90 is what I have on Binance. Yeah.
Right. So it makes sense, right? Where like, all right, so I'm risking $11 to potentially, if this survives in a couple years, I could have, 10, 20x my money. And so assuming you only put like a couple percentage points of your portfolio, it really could be a great longer term investment. Again, understanding the risks involved.
Yeah, the greatest thing that ever happened to me in regard to the Voyager collapse, which everyone knows I lost a lot of money in, is that when I saw it happening, I was forced to sell all my Solana to try to get out into dollars. And so I actually sold it at 2.5, 3 times the current price. But interestingly, we did have that sort of descending triangle on Solana, which has hit its target, which was this sort of idea. And I drew this when it was happening up here, I think maybe when it came to here. And so, I mean, this theoretically, technically kind of has hit the target for the low. I mean, it's a really miserable. If you take a look at it, I believe, I'm going to guess, I haven't actually looked, but if you pull RSI, I guarantee there's bullish divergence.
Right.
Yeah, there was bullish divergence there in the daily, or potentially have a higher low here with lower. I mean, this looks ripe for all the reasons you said, for a bounce and for a number of other reasons, to be quite honest. I'm going to be honest, I'm not buying Solana. Just not. Like, there's a million things in the world I can trade right now. I have nothing against Solana. I'm just, it's not what I'm doing. But I could see very, very reasonable reason to believe that this is the knife worth catching right now.
Yep, I agree. And I've the people will say that, like, don't catch a falling knife. I believe that if you have good, solid technicals and you have risk management and you have, risk tolerance of putting and understanding how much to put in it and understanding the risks involved, then there's really nothing wrong with it. But it's just most people don't have those abilities, and that's where they get into trouble, right? They put 50% of their account in it.
People buy a falling knife at a random level because price is down and they think it's a good price. But if you're at a major support, it's not a falling knife; it's a test of support.
Right. Exactly.
Yeah,
exactly.
Right. So maybe you want to see it, break a slightly below and then flip it back and flip it to support. But this is a major, I mean, you pointed it out. I mean, the 1090, 11-ish level is a major support. You have potential bullish divergence. The kind of bearish patterns have played out. Most people who are selling have probably sold, so, and if whatever is locked up in FTX will be locked up in FTX for a very, very long time, for that bankruptcy to play out. So that supply that anyone's concerned about should not be a short-term supply at all. Yeah.
Yeah. And in fact, what's interesting is I've heard that the government owns like a huge amount of Bitcoin that they've seized. I mean, there's almost in all these cryptos, there's some party that's holding a huge amount that they may have to unload at some point. But I think the idea is that if these things get back on their feet and they're good enough technologies, they should be able to withstand that in the longer term.
Okay. So, I mean, in general, are you concerned about altcoins? I mean, if your thesis obviously is that Bitcoin by, Q2 or something might be at 10,000, you got to think altcoins are going to bleed disproportionately larger, right?
Yeah. And I do think that. I do. I do think like Ethereum could easily retest its 52-week low, which was well below 1,000 there, maybe even go a little bit lower because, again, everything follows that Bitcoin chart. I do think that the issue here is that we're going to see what does it mean to be a security, right? So a lot of these altcoins are going to be labeled securities. What kind of hurdles do they have to then get through? And how much does that hurt their investability? Maybe it doesn't at all. Maybe it makes them stronger in the long term. But my thinking is that knowing how stocks being listed on the NASDAQ and S&P and so forth are, there's going to be hurdles that they have to get through. And number one, that's kind of good because it's going to get rid of a lot of the weak projects. But on the other side, people that are invested in these weak projects, you may see it go down to zero at that point. So again, I do think that there's more downside on the alts. But I do think, again, the best projects probably do survive and thrive in the long term.
It's interesting you talk about Ethereum visiting its lows because Bitcoin clearly, obviously everyone knows after FTX made this major new low, right? We sort of had that 17, mid 17s level that had held since June. And that was the bottom of the range, 17,592, I think, on the chart that I have. But then that broke and we went down into the 15s. Ethereum's still sitting in the mid 12s, 50% higher than the June low, which was 8 something. right? I mean, that relative strength has to be attractive to people. Listen, there's some people who
It
say
is.
it's going to revert to the mean, and that means it has further to fall. But obviously, I mean, it went up to 2,000 from 800. Bitcoin never showed a move proportional to that.
Never. Yeah. So I agree with that. And that is relative strength. There's 100% accuracy in that. So what I would kind of be looking for is while Bitcoin makes new lows, let's say 10 or 9,000, you probably see Ethereum come down to the double bottom here. And that would be
Yeah.
my big buy level, right? In a poetic sense, it's almost like, okay,
the hell
that's a
out of that.
technical support. It kind of retests this double bottom, but doesn't really break it, while Bitcoin does in the next few months.
Yeah, I think. Yeah, I mean, from here, a 50% drop on Bitcoin is to 8 or 9, and you get just below that low on Ethereum. So that's interesting. I thought, did I see you had a Cardano chart pulled up there for a
Yeah,
second?
interesting chart on Cardano. You're stuck in this channel, right? This long-term channel going back to August. And what's interesting is every time it tags this lower level, you're getting some sort of bounce, but it's still stuck in the downward channel. So for me as a trader, what I'm looking for is every time it hits here, I'll take a small position and look for some sort of bounce. But the real breakout occurs when you get through the upper trend line here, right? So that's right around 36 cents right now, right in this vicinity. But you just look at these charts and let them guide you to the trading opportunities. And again, when you're at the low end, you get these bounces, right? Or at least these sideways small moves. So use it to your advantage as a trader. And then same thing up here. You could technically look to short that. But then if it breaks out, watch out, because it could really pop significantly.
So would you be looking for a trade from here to that trend line? Or are you looking for a break of that trend line and then the retest for a move up?
Yeah, so right now, this is like a little bearish pattern. So I think I'm looking
Yeah.
for one more move to the downside here, get us down to that like 23 cent, 22 cent range. And then I would be a buyer off of that for a little bit of a snapback off of it. In terms of what you can see here, you hit it and you actually had a good bounce. You're not getting that same bounce here, which shows a little relative weakness. Same thing here. Look at that hit and look at the size of the bounce. Look at the hit, look at the size of the bounce. So this is a little bit of a weaker bounce to me at this point. So maybe one more little dip and then look for that bigger snapback.
Yeah, I mean, I haven't looked at, honestly, I've just kind of closed these charts for the past few months and haven't really looked at them. But
Yeah.
I'm pulling up just like my old ADA chart. And I drew this when it was here, and you had sort of the potential double bottom that we had this sort of bouncing ball
Nice.
descending triangle, just like on Solana. It did, in fact, break down. I can't imagine whatever the theoretical target would be will not be accurate because, it'll probably be too low. But yeah, you'd be looking at something like where price it, that gives you that 23 cents that you
23
just
cents,
talked about.
yeah.
If you pulled sort of the target of that, even though it's sort of deviated above. This bottom here, though, it definitely is bearish consolidation. We keep seeing it over and over and over again on all of these, right? You get the drop, as you said, but at least this one's kind of rounding.
Yep.
This does look a little bit more attractive, a little bit more like it could be accumulating than just strictly a bear flag, because you sort of have the lower low, but so you can't really draw a ascending bear flag or anything out of that.
Yeah, very true. Yeah, that's not
Yeah.
that's not a correct bear flag ascending.
Yeah. So, are you looking to play any of these throughout 2023, or is it basically like I'm looking for that drop this week and I'm going to get in it and scalp a 10% move?
Yeah, so for me, it's mostly with the alts, except for Ethereum and Bitcoin. It's mostly shorter term trading, just because, again, I'm just like so fuzzy. And in terms of at this stage of my career, I'm in my 40s as well. And it's like, with the family, I don't really have that risk tolerance to just hope and pray that something 10x is over a period of time, unless I truly believe in its longevity. And so for me, it's more just sticking with the longer term on Ethereum and Bitcoin and trading the smaller alts.
You mean hope and praying are not trading strategies? I thought those were the best strategies.
I was in my early career. That was actually my staple.
Yeah, you and everyone else. Talk about that. So listen, were you terrible in the beginning of your career like I was?
Oh my God, I was horrible. I mean, I was just so I had $10,000 after my first job at MetLife. I left after 1 year on the dead day of it. And I said, I'm going to go trade my own capital. Had $10,000 and literally I had to work 3 side jobs because I kept on losing money. And eventually you'd go get to the point where you couldn't even trade. So I worked 3 side jobs to just replenish my account. And just kept studying and studying. And it took me years. I mean, I didn't have a mentor at the time. I didn't have anyone that showed me how to trade technicals. It was a learning experience of epic proportions. And over the years, I lost hundreds of thousands of dollars until I finally got the hang of it. And even now, I mean, I still mess up. I mean, there's still there's no perfect trader out there. It's just making less mistakes than you did years prior.
Yeah, expecting to be a perfect trader is like expecting to be a perfect batter in baseball or something, right? You're amazing if you get hit, do something 3 out of 10 times. And so I've always said, to me, if you can just take small losses and you even hit 50% of the time, you're pretty good at trading.
Yep, absolutely.
Just be wrong half the time, but be wrong less
Yeah.
for less of your capital, right? So you said that you're primarily more of a stock trader. I mean, I would love to see more altcoin charts as well, but then I think that we all can agree that at this point, Bitcoin is largely correlated to tech stocks and to risk assets. So do you have a thesis on, you said that you think stocks are going down lower, on when you think perhaps that could end? And my idea is that whenever the bottom comes, Bitcoin's what you want to be in, because in March of 2020, the stock market doubled and Bitcoin went up 17 times, right? So you want to be in the higher beta asset on the way up, not on the way down. So, maybe taking a look at stocks in general and where we're at can give us an idea of when is the ideal time to come back into Bitcoin, regardless of price.
Yeah, so I'm in the camp that we drop at least another 25% on the S&P next year. So I have a short-term target probably for the first quarter or so around this 3,400 level on the S&P. That correlates with the COVID pre-high, right? Just before the COVID collapse, that was where we were on the stock market. And then we have a longer term trend line that really goes back all the way back to 2009's lows. And you can see here, the only pierce of that line we got was the panic in COVID when people thought the world was ending, basically. Aside from that, that's kind of my target for next year, which is around 3,000 on the S&P. So you're talking, 15, 20% at minimum, maybe even a little bit more. My thesis for why Bitcoin bottoms and the stock market doesn't is that I think that with regulation and with an economy that kind of is going into a recession, you're going to see earnings decline. So there's going to be an earnings recession in stocks, which means they're going to make less and less money, which means their valuations have to drop, stock prices have to drop. But with regulation in crypto, the funds, the big money is going to feel more comfortable about protecting their assets by moving into something like Bitcoin, like an alternative, kind of like a digital gold, if you will.
Yeah.
And I think that's going to be the kicker of why we could see Bitcoin actually far outperform in the next few years the stock market, even if the stock market goes down. In fact, one chart I'd love to show you guys here. Let me show you this. Let me see if I have it on the chart. So one of the things that I've been looking at is the comparison. And this is kind of a scary comparison, so take it with a grain of salt. But essentially, if you go back to the dot-com bubble, so this was your dot-com bubble in the S&P. Then you had this decline, which was the collapse, the real estate bubble, the financial crisis, and then look at the move up that we made all the way to recent highs from that point. And what's scary about this, Scott, is that if we go to the Dow Jones Industrial Average chart, and I go to the monthly chart and we scroll all the way back, and again, by no means am I mentioning this to create any sort of panic, and I don't want people to panic because there's always ways to trade it. But look at the comparison in the chart from the mid-1915 period, and look at that, and then look at the run into the Great Depression. And again, I don't necessarily think we're going to have a Great Depression, but I think we could be in a prolonged bear market in stocks. And it is kind of scary to see the similarities in the kind of M pattern, the mega insanity, which was the roaring 20s, with what we've experienced over the last 10 years since 2009 or 13 years. So kind of little things like that I pick up on. I'm a student of history. I think that you learn a lot about the future by studying history.
Yeah, it's because humans never learn their lessons and always repeat the mistakes of the past. But what you just said is very interesting, because I've had quite a few guests on actually who say eventually the Fed pivots in 2023. They do something. We go back to not necessarily money printing, but the tightening stops and we see a big run. And that's before the real bear market, which is kind of the idea that you're giving right there. And even yesterday, I shared the exact same chart that you just did. For me, it was the SPY because it's tradable. So I look at that more than the SPX. I even literally put a 4X thick red line there yesterday on the stream and said, they've made this double top and it took 13 years for the market to make a new high.
Yep.
13 years. So that it kind of gives you the idea, even if we went back to a high right now, sort of as you're alluding to, and we see one of those face ripping rallies, it could be a bear market rally before a even bigger dip. I mean, we just saw it. So to say it's impossible, I mean, this is from March of 2000, double top in 2007, and then 2013 was the breakout and retest.
And I think
13 years to make a new high in the stock market through the 2000s.
And I think your chart is really key, right? Because you're showing that trend line, that trend line flat across. And notice how we never retrace to that scene of the crime, right? There's this tendency for markets to break levels and then go back and it's almost like going back to home base to refuel, and then they continue on their trek. And in that situation, we never retested that high pivot from kind of the .com high and then the double top in 2007.
Man, I would hate to see the S&P come back down, or SPY.
I know. Could you
come down to
imagine? I mean,
155.
imagine what things look like. Holy cow.
What's the equivalent level on SPX? Now I got to look for my own reference. Right, Scott. I mean, that's going to be in the 1400s, 1500s, something like that.
1600. Yeah.
Yeah. Let me. I'm gonna give
That's
myself.
That would be, what would that be? A 50%, little over, more than 50% drop from here. Yeah.
Yeah, that's it right
Which,
there.
by the way,
that'd be pretty bad.
Yeah, wouldn't it? In 2009, I mean 2008, 2009, the S&P dropped 66%, I think. So it's like it's not unheard of in bad bear markets to see those type of corrections.
I mean, when you look at it in context, I'm not so bearish, and I don't like to give fear. But when you look at it in context, I use logarithmic charts, obviously, personally, so it gives you a kind of an idea of the relative, drop. I mean, this almost would look like a bull flag in any other market if it wasn't as steep, right? It's not. I mean, but this is look at this versus this or this, right? I mean, it's not even close. These are massive drops compared to what we're seeing right here.
That's right.
It's even that this has got to be late 2018, I'm assuming.
Yeah.
Oh, no, that wasn't that. This was the late 2018 drops were here. But I mean, that's COVID. Yeah. So, I mean, COVID. It really hasn't dropped that much. When you look at major, if you're talking about a Great Recession or a depression, So listen, I know that we're running out of time here with you. Do you got anything else, final thoughts you'd like to share with everyone?
Yeah, I think that people just as crypto investing goes, you want to, generally trade it, look to buy key technical levels, sell pops until we get out of this bear market. We showed some of the trend lines where once you get above those, things could start to change. And then just honestly, I think that even myself at this point is in the boat of saying, let's see what the regulation comes forward. I think the sooner the better, because then at least we know where we stand. What did these alts have to go through to be securities from the SEC's point of view? And that clarity actually will give confidence to investors out there with money to put into crypto. So, I mean, I think that's really about it. Just hang on to your hats and know that at least I'm a true believer that Bitcoin will rise and really take out the all-time highs probably in the next 3 to 5 years. So I think it's a good time to look to potentially accumulate. Just be ready for a little more pain.
And before I let you go as well, where can everybody find you? I realized our names weren't on here. Maybe that'll help. Yeah, it's at Gareth Soloway to give people the spelling on Twitter, right? And then you also, I know you have the site In the Money Stocks, and I believe you have a crypto site as well. So where can people follow you, follow your trades, follow your charts, learn from what you're doing?
Yeah, so for crypto, it's verifiedinvestingcrypto.com. And then for stocks, it's inthemoneystocks.com. And basically, I put out trade signals. I do daily videos, all the good stuff, all technicals, all kind of no emotion. It's all just the facts. Oh, no emotion. That's the part that will probably cost you those hundreds of thousands of dollars and made you have a three extra side jobs, right? Yeah. Not because you couldn't identify a level on a chart, but because you probably were too emotional about it. At least that was my problem. I was a gambler. Me too. All right. Awesome, man. I'm going to let you go. Thank you so much, Gareth. It's absolutely been a pleasure. Everybody go follow him, Gareth Soloway, on Twitter, and then you can check out all the other things he has to offer, man. It's really been a pleasure. Thank you. Truly a pleasure of mine. Thank you, Scott. Guys, sorry we had one question there. I was gonna leave, but now let me see the question that Mike had brought up. Scott, I've seen some TA people calling vehemently for 3K, 4K Bitcoin in 23. Do you and GS think that's even possible? Anything's possible, but I can't. There's no way you can tell me based on TA that there's a compelling reason to believe that we're going to 3,000. Right now, if we break the levels he talked about, 9, 10, and see convincing price action below there without any snapback, then you can start talking about that. But I would say that you play these assets level to level, and there's no reason right now that I can see. I mean, I could pull up a weekly chart, I guess. There's no reason I can see to start talking about 3,000 from here.
except for maybe emotionally saying that we go back to 2019 here. No, I mean, if we break all these levels, 13.8, 12.4, I don't know what this even, 10.5. I mean, there's so much support through here before we get to there. I just can't see making that argument as of yet. Can't see it. Yeah, Gareth was amazing. That was really compelling. That was a lot of fun to share so many charts, go back and forth. I've never had him on the show before, and I think that very like-minded, very pragmatic approach. If you're going to trade it, do it responsibly, carefully, and don't be like Caroline Ellison and go publicly and say, I trade my billions of dollars without stop losses. Well, those aren't really tools that we use. Irrational says, I see the bottom at 13.8. That is a huge level, as I just pointed out. But here's that 13.8 level right here, right? 13,880. That was, remember, if you guys remember, in that major rally we had in 2019, this was that face ripping rally that we talked about. That he talks about, where we had the 20,000 high in 2017, came all the way back up to 14,000 those years later, epic shooting star right here, candle, and then all the way back down below 4,000. That's kind of the exact idea that we were just talking about, like how horrible it would be if we saw price rip back up to like 30, 40, 50 right now, then drop to 10. That's what you'd be looking at there. But yeah, that is if you really zoom in on it, we can call that an untested level. It sort of is here, but in my opinion, the breakout happened on this candle and it never came back to test it. So that's a major, major level that was broken and never retested as support. So I'm assuming that that's why you are looking at that level. I'm assuming. But assume nothing, makes an ass out of you and me. That was great. This is exactly what Alberto's saying. His thoughts exactly right there. So, anyways, that was the other question about 3-4K. Anyways, tomorrow's going to be crazy. I'm just going back right here. Tomorrow we have Mo Sheikh, who is the co-founder of Aptos. Obviously, Aptos was massively invested in by FTX. So we're going to talk about what that means for projects, what it was like to be so fundamentally affected by the FTX collapse. They had received $75 million in a total round of $350 million. And, the one of their ecosystem projects just suspended operations. So we're going to see what's going on with Aptos and what's it like to be a part of that FTX nonsense. Guys, that is all I have for you today. Once again, we had the little banner. Check out Prime XBT. See? It's in the description. Check it out down in the description. That's all I got for you guys today. See you tomorrow. It's going to be epic. Peace.
That's dope.